Hello everyone and welcome to the latest episode of the 10-Minute Market. I'm joined by Jeremy Marshall, my co-host. How are you, Jeremy?
I'm good, Will. How are you?
Pretty well, thank you. We've got a few things to talk about today. Jeremy and I were speaking a little bit earlier, obviously, about various points, and one of the things I was looking at this week together with Jeremy was house prices. You know, what are the latest indexes showing? And Zoopla released their latest house price index. We obviously saw a boom sort of post-COVID and a lot of money coming out of sort of some of the cities like London, for example, and going into some of the sort of home counties, and those markets really doing well. And then we've seen a little bit of a tail off, obviously, since we've had the pressures of interest rate rises and obviously the central bank's drive to kind of reduce inflation. But ultimately, we haven't seen significant drops. We've seen a little bit of a correction in certain markets, like the South, for example, but we've seen other markets holding relatively firm. Anything to add from there, Jeremy?
It was kind of a clear reflection of what happened there. You know, the stamp duty holiday that came in really gave an incentive to a certain type of property. So we can see there that the properties in the South generally, you know, just as you say, in the home counties, they had a big boom in terms of prices up till then. And actually, probably they're the ones that have fared worst since, you know, if anything suffered last year in terms of overall pricing. Actually, it's, you know, London and the South are the ones, you know, which, you know, understandably interest rates get higher, the more expensive properties kind of suffer more. But they're the ones actually, if anything, had the worst kind of price depreciation last year. So actually, a lot of the things we've been focusing on, and what we think some of the best, say Midlands, North, and so forth, actually, their average price deflation last year was about 0.3 to 0.5% between those two. So actually, you know, about a third to quarter of what other areas of the country have been. Scotland, interestingly as well, actually has maintained price growth throughout the entire time, which is interesting to see different markets. But look, general consensus, the really positive thing is buyer demand, sales agreed, new inventory, they're all at record double-digit growth now compared to last year. So all areas are significantly looking like an upward trend.
Yeah, exactly. I mean, you saw, as you say, there were incentives to drive the market forwards, but it certainly didn't slip back as much as that, you know. So I think I've got a place down south, and, you know, if it corrects by 0.3%, having had a really good run for the last 3 or 4 years, so be it. You know, long term, that doesn't really affect anything in my investment journey, you know.
Yeah, absolutely. I think everyone has to be realistic, isn't it? There was a really bumper time in the couple of years before that. So if there was some markets had a couple of percent slip back, actually, it's just you know, possibly eating away some of the enormous profit that came from the couple of years preceding that. But yeah, look, I think one of the most important things anyone buying anywhere property in the world is the undersupply and supply and demand. It's, you know, it's the skeleton, the backbone of any property investment.
Well, it's what sends it flying upwards when the market's booming, and it's what stops it crashing back down when the market slows a little bit. And, you know, the UK property market has generally kind of weathered a pretty rough storm in the last kind of 12 months. And you're right, Jeremy, it's supply. It always is supply. That's what's going to stop the big corrections.
Yeah. Well, so, you know, I thought that would be an interesting thing for us to look into a little bit more, just as to, you know, because it's a fairly obvious thing to say, isn't it? Everyone knows that, but obviously not all markets around the world are underpinned by an undersupply problem. You know, some places are just on a massive growth spurt, and, you know, it's largely speculative. But actually, you know, anything that, I suppose it's our philosophy, isn't it, in terms of looking for, it's, you know, what makes a good investment is fundamentally not being enough of property for the people there. But I think a lot of our listeners would understand that and actually know it. But actually, what are the real figures? You know, like, you know, where are we at, and what's, you know, what kind of is needed to be built, and, you know, are we going to get there, I suppose. I mean, do you know the headline stats for that?
I don't. You're the stat guy.
Just loading you for it. You do know it. But look, I mean, you know, the general figure that any government keeps coming saying is they need 1.5 million homes in the next 5 years, which is a lovely.
You've been saying that since I've started this job.
Yeah, well, no, exactly, isn't it? You know, everyone understands. You know, like the population is steadily increasing. and there's a need for homes, and we do have a lot of immigration coming to UK. It's still a very popular place for people to come for their security, for their jobs.
But that's
Interesting,
an
actually.
interesting one. I mean, people said, oh, the UK is going to have a, with Brexit, population is going to drop. But actually, the latest statistics from the OECD say that population is going to grow by 10% by 2036. So,
Much
UK
faster
is going to be
than
73 million people living in this country, and it's a
10%.
great country. And there's work, and there's jobs, and there's money washing around. But there isn't many homes.
Yeah, no, absolutely. And I think that OECD data that came out in January, that was probably a lot higher than it was expected and anyone had said before. So yeah, 10% rise up to 2036. For a big established country, that's a really, really fast rise. And so all the government predictions about how much housing is needed, actually, that they're built off the previous expectations. So, the government won't want to be saying they need to build more homes, but they'll probably be hand to be forced soon. But which will make this problem even worse, because, as I say, I mean, if we need 1.5 million over the next 5 years, that's 300,000 homes a year, and basically going back to 1982, or no, there's one year in 1988 and one in 2006 and 2018 where we got above 200,000 homes being built in the UK. But it's basically flatlining around the 200,000 homes a year being delivered. So, unless there is a fundamental seismic shift in, country policy, which frankly I don't think they've got the budget for, to start building, an extra 150,000 homes from the government directly, then this problem is going to keep exacerbating and keep being a problem for a lot of people. So, for investors, obviously, that's a really powerful thing. It's really useful for us, but obviously, it makes it harder for locals getting on the ladder and for the rental market overall. So, there's plenty of things the government can do, but unless they're doing we're going to commit 100 billion to just building a whole bunch more, then the problem, it's all kind of chipping away at the problem, little axe and massive rock, basically.
Well, there's always this noise about we're going to remove red tape, but I mean, they print more red tape than ever, don't they, in this world we live in now? So, I can't see that happening too quickly.
Everyone's got a voice in local market in the UK. You start saying it's a lovely idea, great, let's take away, some brownfield science or, some greenfield and convert it, but local communities have all got a very strong voice. So it's nice to plan it on a country scale, but the right to the local populations are quite strong. Yeah. So
you can't just take away red tape. It's there and it ain't going anywhere, and you've got to still get through so many loopholes to get a development out of the ground. Other countries around the world where we have clients can just build, but it's nothing happens as quickly as that. As you say, Jeremy, everybody had a voice, and too many people have a voice.
Well, it's similar, isn't it, to the big electric windmills they've been putting up. They're trying to find places all over the UK to do them, but that's the base difficult thing, basically, because you get three guys in cottages on the hill there, and they say we don't fancy it, and they really can't do it. So trying to find anywhere which isn't offshore is a massive problem. It's exactly the same thing for big housing development. So yeah, the governments are hoping and planning to do more. Literally in the last 2 weeks, I've seen a handful of articles talking about this. It was Michael Gove is what they've added an extra into the affordable housing loan scheme. That's not for individual buyers or investors. That's more for developers to get easy access to funding for improvements. That's basically taking existing housing stock and trying to get it back onto market to make it a suitable level for renters. And so things like the after Grenfell, the cladding. There are some properties which have been, taken off market, basically, because they were kind of considered the cladding wasn't right. So there's a bit more money for that to get those ones. But, we're talking about 20,000 homes over 5 years, basically. So it's great, but it's a bit of a drop in the ocean. So, and there's, less red tape for brownfield sites. There's been discussion. I think you were telling me about this one, about the looking to get some shops converted to residential. So of course, the high street is a very
high streets are declining, aren't they? I mean, that's a whole nother topic of ours to talk about the future of our high streets in the UK. I mean, some are booming in some of these market towns, and some are kind of going completely the other way. So it's there's stock there. I mean, that'll be interesting. There'll be opportunities around the right towns that are failing. And there'll be
Exactly.
opportunities to, I mean, we've been looking at various bits and bobs, and there you've got, you've look, the things, if the foundations are there, the bricks and walls are there, when it comes to sort of build costs, a lot of that is mitigated. So I think that would be an interesting sector to be buying in, because it's not going to get cheaper to buy new build schemes, because build costs are not going to drop, and
not crazily.
Supply's not going to, there's going to be no reason why stock going to be cheaper in the next 2 or 3 years. But there's growth. But if you can find a sector of the market where you can get a bit of value, and you still get a very good rental return, that's probably where a lot of investors will start leading towards.
I think there's a lot of opportunity there. Obviously, we're going to have to see how it all pans out. But I think as a cultural institution, the high street, not dead, but the high street's evolving and changing. And and you're in traditional little shops and so forth. And this doesn't matter whether you're somewhere a bit kind of less economically powerful, in towns up north, or kind of big established towns. It doesn't matter how much wealth there is. The way people use the high street has changed fundamentally. So I think that's not going to stop being the center of communities in a way, but it will just get repurposed. And I think in terms of value residential, that there could be in some areas, particularly wealthy towns, where that's being repurposed. I think that could be something really interesting for the future.
Yeah, exactly. Well, look, that's our slot. That's our time limit done. So
it's always so quick.
Yeah, thank you for listening in. We hope you find it useful. We'll be on in a couple of weeks, and in the meantime, please share, and if you haven't subscribed, please do, and we'll see you again on the next one.
Thanks very much, everyone. Look forward to seeing you again.